Nykaa, for instance, the most sought after, the most chased, and the most infamous listings of its times. The stock, by the way, is now struggling at its 52-week low. What are the concerns? Is it a buy given the fall in the stock price? Let's put all of this into perspective. And Karan Taurani joins in from Elara Capital to discuss exactly that. Karan, hi, good morning. Great to have you on the show. Karan, first things first, what's ailing this stock, considering this was the listing of its times and gains thereafter?
Hi, Aisha. Good morning. Pleasure to be here. So basically, if you look at Nykaa, they've gone through multiple changes, post the listing. We saw the valuations really move up significantly high in line with other internet companies that time around. It's almost a year that Nykaa has got listed now. And the valuations have come up. So the valuations have come up for the entire internet pack as a whole. But for Nykaa, if you see, the performance has been slightly better as compared to other internet companies, primarily because this company has got a proven unit economics model, and the company is profitable in nature with the potential of getting higher profit from here on. So I think the reason for this is, of course, the de-rating of various internet companies, which is kind of weighed against Nykaa. That's one reason in terms of why the stock has come down. Second reason is in terms of the expectations on growth front. So at those valuations where Nykaa got listed and the price moved towards 2000 and beyond that, there was a lot priced in terms of growth. I mean, Street was expecting a growth of close to 40% plus in terms of CAGR for the BPC business. And I think that seems to be, on the lower side now in terms of band, because what we are expecting in terms of growth is somewhere closer to around 30 odd percent. So I think there is a lower growth also, which is to be blamed for this. And the third reason also is, the emerging businesses. So currently, if you look at the business, I think they are doing a lot of investments around B2B, around fashion, around, getting global brands in India, or probably, taking their brands global. So a lot of investments are in place. So there could be some margin pressure as well. So I think because of these three factors, the valuations, for Nykaa have but nonetheless, I think, from a medium to long term standpoint, we believe the structural story of Nykaa is very, very compelling because they do have a very big first move advantage as far as the BPC segment is concerned. So despite the strong competitive intensity, despite some of the concerns given around BPC in terms of growth going ahead, we believe Nykaa will hold on to their market share over the medium to long term as well.
Karan, so are you of the view that given the fact that it is the only profitable BPC player compared to its peers, which are of course unlisted, that even with rising competition that's picking up, that this trajectory of profitability and healthy earnings growth and operating efficiency is only going to continue?
Yes, absolutely. I mean, if you look at some of the peers in BPC, specifically the online BPC segment, the numbers there are very low in terms of scale. And if you look at the time frame in terms of when they started out and all those kind of things, it's largely similar to when Nykaa started out. But the numbers are maybe 1/10 or 1/12 of where Nykaa would be. And one of the key reasons for that is the AOV. If you look at the AOV number, Nykaa is actually close to 2.2x as compared to peers in terms of AOV. So they do have that recall in terms of a premium customer, and that is something which is helping them gauge profitability versus peers in a faster pace. So I think they do have that advantage. Of lately they have also had a lot of brands which are exclusively available on their platform, on a lot of the global brands which they had brought into India. But what we're hearing now is that some of these brands are also now available on a non-exclusive basis. But nonetheless, the good part here is that whatever recall, whatever first move advantage, whatever good that they have done for the customer, I mean, unless something goes wrong in terms of customer experience, a customer will not basically move away from a Nykaa platform to some other platform. So I'm not denying the fact competition will also grow, but I don't see, the homegrown competitors actually competing with Nykaa in a big way. The competition is going to happen more from the super app side, which could be from the Tata Clicks, or which could be from the Ajio, or it could be from the Flipkart. So I think the competition is more from the larger app side, but not the smaller players who are going to compete here. But the only thing here we need to watch here is in terms of growth rate for BPC. So if Nykaa is able to maintain that online BPC segment growth rate of 30 to 35%, I think those numbers are fair enough. But if the numbers are moving below 30%, I think then there is a concern, because then there is a potential loss of market share, which we clearly don't factor into our estimates.
Thanks very much then, Karan, for joining in and giving us a view on Nykaa, as well as what exactly has been ailing the stock, the long-term outlook, in light of the fact that the market capitalization has plunged by half and the stock hit its